Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me as always is Nigel D'Souza. And we have Rima with us to start off this brand new week. And as we start the week off, it's a feel-good factor, lots to celebrate on the field, off the field, in the market, lots to talk about. So we'll get straight to it, guys. Good morning.
Hi, good morning. What a thriller, right, yesterday?
Absolutely. The last week has belonged to India. The Indian markets outperformed. And yesterday, the men in blue, they stood up. They took their, righteous position as the best team in the world. Champions yet again. Don't rule out my boys. I keep saying this. We had a couple of difficult months, but we came back strong. And guess what? Our captain, Rohit Sharma, says he's not done as yet. He clarified that, any kind of speculation was put to rest. And the boys doing that dance, together. That told you the kind of picture. And later on, Sunny Gavaskar as well said, I can still dance as well. So the Indian team, top of the pops, men in blue, coming out champions. I'm pumped up this morning.
Yeah, I know, even at home, the fact that there are no final sort of announcements of people walking away in the sunset, I think that's doubling the celebration, that it's not happening. Maybe just as yet. But we've got plenty to talk about as well. And I think the Indian team's fortunes in this tournament and the Indian market's fortunes are kind of coincided, because last week when we really went on that winning spree is when the market also started looking a little better, lesser FPI selling, and we'll talk about that as we get to it. What a night, really.
Well, that's right. And the team construct is such that maybe we could possibly put in India a second team as well, and still have two teams of ours playing in the semi-final, because that's good. The next gen as well is shaping up very, very well. You have Iyer, you have Gill, all the boys in there.
Varun Chakraborty, the discovery of the series.
Amazing. And the New Zealand players came out there attacking him, and then he bounced back. So Kuldeep, all of them, splendid performance, and feeling so good this morning.
Oh, absolutely.
And not to forget, it's a truncated week, right?
How can we forget that?
So you start with a win and you end with Holi.
Which is why I said plenty to celebrate this week. Okay, let's look at the cues, and they're actually not too bad when we're looking at the global backdrop and we're looking at where India stands in that overall context. Quickly to come to Wall Street. First of all, Friday was a bit of a relief. After several days of selling, there was some gain, actually not without volatility. Even on Friday, the US indices were a little all over the place. But by the end of it, they managed to recover. The gains were about 0.5% to 0.7%. Now, the jobs report was soft. Quickly to get into the internals. Non-farm payrolls up 151,000, and that's so well short of the estimates, which were around 170. The previous number was revised as well, revised downwards to 125,000, the January number. That's something to keep note of. The unemployment rate was 4.1%, estimate was around 4%, and the average hourly wages, they did rise about 0.3% month on month. They rose about 4% year on year, but that rise was also slightly lower than estimates. So overall, slightly soft jobs report. And the thing is that this is a jobs report before the Doge-led cuts, all the layoffs that Mr. Musk has been announcing, before they kick in. They'll truly start reflecting in the March report. So the unemployment situation will be watched carefully. Now, what was the market reaction to it? Equities still managed to drift higher. Bonds were really, going nowhere, and the dollar continued to tumble. For bonds, it's a bit of a, catch-22, because while you can say the report is soft and maybe you have hopes of a, U.S. Interest rate cut, the other side is the whole tariff business and the higher inflationary pressures that are now being penciled into the U.S. economy. So that's what kept bonds on a very tight leash. Hardly 2 to 3 basis points movement, both on the U.S. 2-year as well as the 10-year. So we're around 4.3%, just around that handle on the U.S. 10-year as well. The bigger move happened on the dollar. The DXY slipped. This is Friday's action. It slipped below the 104 handle as well. In fact, the dollar has been weakening against a lot of the key counterparts. The euro for sure, the yen and the Swiss franc, and we had more of that on Friday as well. The euros made the biggest headlines last week when it comes to its move. Almost 4.5% weekly rally against the dollar. I mean, those are incredible levels that we're talking about. 1.08 on the euro dollar equation. That's what we're seeing. Even this morning, as you can see, the dollar index is slipping further away from that 104 mark. So the weakness in the dollar is something that you really can't be away from. Now, why do I say that it's a little muddled with respect to what happens with this soft NFP? Why is the market not cheering it as much? Because of this quote. Mr. Powell he was speaking at a New York event, and he came and said that we do not need to be in a hurry. We are well positioned to wait for greater clarity. And he's speaking in context of US tariffs. So right now, if you're looking at the market, the expectation is 3 rate cuts, 25 basis points rate cuts starting June. That's what the Fed Watch tool is telling you. But this comment is telling markets that the Fed is in no hurry. They're going to wait and watch to see the inflationary impact of the tariffs. Speaking of tariffs, I mean, that was really playing out on Friday. Once again, a lot of the European luxury good makers, I mean, stocks like Burberry and all, they were falling 5, 6, 7%. So that continues to be a big, big concern. And that's a concern for us as well. We'll talk about this because over the weekend, President Trump has blasted India once again about, India's role and how it's so difficult to sell anything in this country. So we'll get to that as well in a bit. The only real negative is oil because geopolitical talk is back and the all-important meetings in Saudi Arabia to try and reach a peace agreement, a ceasefire agreement on the whole, Ukraine-Russia issue. That's going to be center stage. So geopolitics is back. And in that or against that backdrop, there was another threat coming in, this time for Mr. Putin from Donald Trump, saying that I will impose, greater sanctions if Putin does not get to a ceasefire. So that's something to take note of as well. Very quickly, US markets have started faltering. That's coincided with higher or lower FPI selling in India. That's the extent of price damage on Wall Street that we've seen, 2.5% to 3.5%, coincides with the fact that FPIs are selling less and less in India. Will they now relent now that the home market is having some issues? I'll just round off with the final numbers. And remember, I showed you this tally on Friday morning as well, up until Thursday. Just add Friday's number. That's a beautiful looking chart. The intensity of daily FPI selling has been coming down. If we can get more of that, it'll be fantastic. And we're just about 1% away from the 20 DMA. So the Nifty perhaps is going to take aim at that first up. But let's see how this plays out, guys.
Well, just some more points on the U.S. markets in last week's performance. The U.S. 10-year yield was up 10 basis points at 4.3%. And now the S&P 500 is below the closing level on 5th of November. That's the election day. So Trump can, the market performance is one of the key parameters Trump tracks. And now it's erased all the gains, so below the election level low. And the dollar index, of course, as Surbi pointed out, lost more than about 3%. Last week for the Indian markets was a week of repair and recovery. The market snapped a 3-week losing streak. On the Nifty, we were up 1.8%. The mid-cap index up 2.5%. Small-cap index rallying 5.5%. The Nifty logging its biggest weekly gain in nearly 3 months. In terms of flows, the FI selling intensity has been coming down. On Friday, the DIs bought 2,300 crore, while the FI net sell was nearly 2,000 crore. So the trend has shifted in favor of the bulls. The question is, will the momentum continue? Will the pullback continue? Over the last 3 trading sessions, as the screen will tell you, that the markets have been making higher highs and higher lows, and that is always a positive sign. So the important support to track will be Friday's intraday low of 22,464, and on the way up, the 20-day exponential moving average, which is about 22,700. So 22,700 to 22,800 is seen as an important resistance. Quick, the cues to track this week. One, it's a holiday shortened week on account of the holy holiday on Friday. We've got the U.S. inflation print on 12th. Back home, the India macro indicators include February CPI and the January IIP. And then you'll watch, for all the ongoing tariff negotiations, the updates, geopolitical tensions, the impact on dollar and crude.
Well, that's right. The weak US data is something that will not worry me, at least as of now, because it's calling the dollar index to a slip. And also it's making the mood more conducive for a Fed rate cut. And on the domestic front, a couple of positives. One is with regard to the RBI injecting liquidity. And the second factor is the FM talking about rationalization of GST rates. Both those two are in the line of growth, and the markets want growth, right? So the economy seems to be in pretty okay shape. And now these moves as well will further make the case that in the coming months things will look better. Let's take stock, though. The Troika, so to call it, well, they're in favor of the Indian markets because the dollar index is weaker, Brent crude price is well behaved, and the US yields as well more or less flattish. Moving to the India's outperformance in the last week, That's great, right? After a while, we outperform. But in the last 1 year or so, actually, India's been a rank underperformer. If you compare us with the US markets, the Dow is up close to around 10%. The Nasdaq, as well as the S&P 500, they're up between 12 to around 13%. So, it gives us some kind of cushion because we've already underperformed. So it gives us a better case to outperform from here on because valuations as well have become far more palatable in comparison to what it was a month or so ago. What do the FIs do? Well, they're selling relatively less in the cash market, which is great news. That net sell numbers come down by half. And they continue to add mild shorts. So their short positioning now is sub 82%. Remember the start of last week, it was close to around 85%. So the FIs, well, they continue to remain net short, close to 1.85 lakh contracts on the short side, while you have clients that they are net long now. So both of them, as has been the case, they have been on opposite ends of the spectrum. FI is close to around 1.8 lakh contracts, clients 1.4 lakh contracts on the long side while they are on the short side. Pulling up two strikes that are fairly active, the 22,800 call and the 22,300 put. Both of them were fairly active in Friday's trading session, and that gives you the broad levels. The Nifty had a good week. You'll get more confident once the Nifty can get past its 20 DMA, which is important, 22,750. On the Nifty Bank, the 49,000. So both those two, they become the important resistance levels from a bullish perspective. So you want to keep an eye out on that. And the reference points you have, going by the options data, the 22,250 mark becomes important that it gets some kind of support at that level. While on the Nifty Bank, we went to this level of around 48,200 in the past week and we bounced off that. I'm looking at two stocks. One is IndusInd Bank because it's been a relative underperformer, and now you have news that the top boss out there has got an extension only of around a year or so. But there was some on the street that was speculating maybe that extension doesn't come about. So IndusInd Bank will be one stock I'll be looking at. And as I said, it's already down more than 10% in the last 1 month itself. It's underperformed what the Nifty Bank has done. And there are shorts in the system as well. So if it opens up weak, I'll be interested to see whether or not it sees a bit of a bounce from the low point of the day. So that's one stock that I'll be looking at. And the second one is Reliance Industries. Equirus is the last brokerage to go ahead and upgrade the stock. Remember, in Friday's trading session, it conquered that 20 DMA, which is an important technical mark. And it's suddenly taken on the mantle of fighting for the bulls. So this one needs to continue its good form.
Absolutely, and the bulls will hope they can continue their good form from last week as well. Let's get started then. There's the equity call coming in this morning. It's actually a little positive one as well. Sunil Kaul of Goldman Sachs says that the cyclical slowdown in India's economic growth and profits led them to downgrade their view on Indian equities from overweight to market weight about 5 months ago in October. He says with the Nifty now down 16% in local and 19% in US dollar terms from the late September peak, investors are focused on whether it is time to accumulate. He adds that while the worst seems to be behind us in terms of economic growth and earnings trajectory, as well as prices have corrected meaningfully, he expects a gradual recovery in growth. He thinks market volatility could remain high near term, given still elevated domestic positioning in small and mid caps and lingering global uncertainty, especially with respect to reciprocal tariffs that could potentially significantly impact India if implemented.